Hello and welcome to the Weekend Investing Daily Byte of 2nd of August, and quite an eventful day, not just locally but globally. Japanese market has cracked very hard today, nearly 6% down. They're calling it the worst day since 1987 for Japanese stocks, and that has had repercussions all over Asia. And this started out with Fed's indication of a rate cut a couple of days back. Didn't cut on that day, but said that in September it is likely. Yield started to fall, and that caused the carry trade in yen to unwind. So we'll have some more discussion on this towards this middle of the session. But the main subject that I want to address today is this one index which most people are missing, and I want to discuss some data about this fantastic index that towards the second half of the video. But please first go and subscribe the video, the channel here. So where are the markets headed? Market had a very nice crack. Why I'm saying nice? Because there was no chance of any recovery during the day. It just opened lower at 24,800 odd, and just stood there plus minus 50 points for the whole day, and then cracked again towards 24,717. So a good crack after a long time. Sometimes it is good to let off some steam. One day of fall, or maybe even if it were to come down a bit, it's no big deal. Actually, we need to tune our mind away from this day-to-day business. While of course I have to report you on a daily basis as part of this series what is happening in the market, but you don't have to visualize your portfolio on a day-to-day basis to the extent that why am I going down or why am I going up. Just forget about all that and stick with the staying with the markets. So Nifty collapsing 1.17% today. As I mentioned, Nikkei 225, the Japanese index, down 5.8%. So very sharp cuts in the last two sessions. And this is precisely where on Wednesday you had the Fed meet and the Fed speak at the end of the day, and the next morning was down day, huge down day for Nikkei, and today another big down day. So what is happening is that yields are collapsing. So 10-year yield on US also coming off very rapidly. So interest rates have not been changed, but bonds are already discounting the interest rates to collapse like this. So 4.3% to 3.9%, very sharp move in the last 1 week, already anticipated before the Fed meet this time. And what this is doing, just understand very quickly, is that when US yields come down, they become less attractive versus other currency yields, and hence the reversal of carry trade starts. So people who may have borrowed in yen and invested in Japanese equity, uh, uh, essentially yen was falling against the US dollar. So, shorting the yen and buying Japanese equity makes sense. But as soon as yen starts to strengthen versus US, which it did in the last few sessions, that trade unwinds. So you basically close your positions. You close equity, and you pay back yen because you don't want to lose in the currency now. So anyhow, slightly complicated trade, but this is what happens usually whenever yields collapse, is that the carry trades unwind. So a lot of hedge funds probably unwinding positions in Japanese equity market, and that's why you are seeing this kind of a major fall. This is a major fall in two sessions, 39,000 to 36,000, almost a 9% cut in two sessions, and that has had repercussions all over the place. Gold in the same few days has bounced very hard. We are now very close to an all-time high again. So 2462 is where the dollar gold is sitting at. Coming back to our local markets, Nifty Junior also fell 1.3%. Again, these falls are currently, I mean, nothing very consequential. I think below this election day high top at 71,000 is where Nifty Junior will become meaningful in terms of levels seen. Mid caps also dropped 1%, but again back to this breakout which was 4 days ago. So we've lost a week of gains here, but nothing more than that has been lost. Small caps also sort of coming back to this range. It had broken out a couple of days ago, but now back to this range, down 0.83%. With Nifty falling so much and small caps and mid caps restricting themselves less than 1%, I think is a good sign, is not such a bad sign. Bank Nifty, on the other hand, did not fall much at all. So that is a very, very encouraging sign that Bank Nifty, which was sluggish all these days, is not falling. So minus 0.4% is virtually neither here nor there. And it is also respecting this support line from the election day high. So technically, market is not looking so bad as it would seem otherwise. Today's heat map, of course, all red. And whenever everything is red, HDFC Bank has to go up. So HDFC Bank is up 1.2%. If you know the reason for this magic, please let me know also. Sun Pharma is up 0.9%, Nestle up 0.5%, Kotak Bank 0.5%, but nothing other than this was rising. So you had deep cuts in State Bank of India, ICICI Bank, Axis Bank, Tata Motors. So auto sector was thrashed badly. Government coming out with and saying that they are not going to increase any subsidy on EVs, and the PLI scheme also is not going to be expanded, as was some rumors some time back. Steel and cement also stocks were clobbered. Energy, which was gaining in the last few sessions, ONGC, Coal India also smashed. So today was a day to profit book, close positions for short-term traders. Those kind of situations were there in the market today. In terms of Nifty Next 50 also very much red, but there were spots of green. So Zomato, after yesterday's incredible result and management speak, up 12% in a market like this. Naukri, of course, holding I think somewhere close to 13 or 15% of Zomato, up 4.5% just on the rub-off effect. You had the Zydus Life, Torrent Pharma, Pidilite, minor gains here, IRFC minor gain, DLF, PFC, REC, Siemens, ABB, Motherson, Vedanta, Jindal Steel, HAL, BEL, all down. Trent, which has been very, very strong, also down 4%. So today made maybe this 25,000 that we've not been able to convincingly cross seems to be a huge psychological point, and maybe we've made some sort of a top for at least a few weeks, if not more. But you never know, this market comes back up very, very sharply, and nobody can really predict what's going to come in the coming days. Sectoral trends all red. Real estate down the most, 3.5%, autos nearly 3%, metals 2.7%, IT 2.4%. The list is long of all losers. Pharma eking out a small gain of 0.5%, but really speaking, there was no place to hide, and that has resulted in the entire week of gains getting wiped out. And even in some sectors like Bank Nifty, in metals, in real estate, even the monthly gains have been smashed hard. So that's where the market is. Maybe the market is signaling some sort of a rest coming soon. Real estate is down, and it is broke down from this previous low at 3.5% fall. We are much below the election day high also. So it does seem like real estate is looking for some consolidation going forward. In stock spotlight, we have Zomato, whichever way you want to call it. Zomato stock zoomed 19% record highs. It went very near 285, closed at 262. Robust quarter results, fantastic management speak. Market cap is now 2.5 lakh crores. So they're saying market cap is now above DLF, above Geofinance. So, maybe in a month or two, Zomato may enter the Nifty as well. So 105% year to date, but from the bottom, nearly 40 rupees, it has climbed almost 6.5 times. Many of our strategies also picking up in this 70, 80 area, and some of them also continuing to hold that. So amazing, amazing turnaround story. And in Zomato, the fact that one gave up after seeing this and did not ride this would mean that you did not have your filters in place, or you do not have rules in place which would ignore this and only focus on the uptrends. So now let's discuss this amazing index that I want to share with you. Just yeah, I think a lot of folks focus on Nifty and CNX 500, but give a miss to Nifty Junior. This is the last 27 years of Nifty Junior versus Nifty 50. For those of you who don't know, Nifty Junior is the index which is comprised of the Nifty next 50 stocks. So the first 50 are Nifty stocks. The next 50 stocks in that list are Nifty Junior stocks, also called Nifty next 50. And they are pretty much ranked as per market cap. So 1 year CAGR on Nifty Junior has been 65% here. Extremely good year for Nifty Junior versus 28% on Nifty 50. Mind you, both are large cap only names. 3 years, 22.5% on Junior versus 15. 5 years is 23% versus 18 on Nifty. 7 years is 14.6 versus 14. So, and in 7 years, you can see that the difference is not so great because of uh, possibly the fall that Nifty Junior had here post 2018 versus Nifty. 10-year CAGR is 16.4 versus 12.5. 15-year CAGR is 15.4 versus 11.7. So virtually in all durations, Nifty Junior has really done well versus Nifty 50, and it is a you know a great index to really also have in your portfolio. Yeah, so sorry, this actually is showing the number of stocks which have really outperformed. So Nifty Next 50 is 10 stocks which have gone up more than 100% in the last 12 months, 8 stocks which are 80 to 100%, 7 stocks 60 to 80%. So you can see here the dominance of stocks which are 50 to 100% is so high in Nifty Next 50, whereas Nifty 50, most of the stocks are sitting here in the 0 to 40% zone. And then, of course, there are two stocks above 100 and five stocks here as well. So the breadth of the winners is really at next level in terms of the stocks here. If we see the 1 year returns, again the same stocks, you have IRFC, Trent, REC, Zomato. All these are Nifty 50 stocks which have helped the Nifty Next 50 index really do well. And of course, some of the Nifty big names, for instance, Asian Paints, Bajaj Finance, HDFC Bank, ITC, Levers. In the last 12 months, they have not really done justice to their investors. And being investors of Nifty, whether in direct Nifty, Nifty ETF, Nifty futures, any which way you buy Nifty, you are essentially, as a proxy holding those stocks also. So that is the problem. When you buy an index, you are buying not just the strength of the index, but also the weakness of the index. And this is where if you are able to sort of segregate the strength from the weakness, then really you can create that alpha on this index. So best performers from Nifty Junior also graduate to Nifty when the dynamics are where the dynamics are completely different. So what happens is that the best mid caps move towards Nifty Junior, and then they really perform well there, and then they become oversaturated, over researched, and they move into Nifty 50, the ones that really grow very hard, and somehow that performance doesn't repeat in Nifty 50. Once stocks come down from Nifty 50 and institutions have reduced their holdings and things of that kind, they somehow again start to perform at Nifty Junior level. So this is a very nice sweet spot between mid caps and Nifty, where stocks tend to perform a lot. Do you have any exposure to this index? I know we have several sort of users for weekend investing who are enjoying this particular index. But if you are not, then do let us know what has been your experience with Nifty versus Nifty Next 50 if you've tried, or if you have never had Nifty Next 50 in your portfolio, would you consider to have that right there? I'll be looking forward to your comments. Thank you so much for watching this, and I'll see you in the next one. Thanks. Bye.